Welcome to ISE's FX Options Weekly Outlook, a weekly outlook on the US dollar versus the major currencies, hosted by Jason Ayres, a top industry instructor and founder of OptionSource.net. Learn to trade your views on the strength or weakness of the US dollar.
Well, hi there and welcome to the ISE FX Options Weekly Outlook for January 25th to the 31st. I'm your host, Jason Ayres, founder and president of OptionSource.net, and as always, we're going to start with a look at our weekly U.S. dollar index. This is just a great way to gain perspective as to how the U.S. dollar has been trading against a basket of currencies. Now, the U.S. dollar index touched 87 this week before closing off its highs, settling on the upper range of that 84-85 focal zone, which still remains a natural support level. Now, at this stage, we are open to the possibility of some backfilling as momentum begins to slow down. If that 84-85 level holds, our 88-89 box remains the near-term upside target. A look at the daily chart shows that there is some indecision taking place at this level, suggesting that this upward drive may be stalling. However, as long as the price action continues to consolidate above that 84-85 focal zone, we have to be open to a test of that upper 88-89 level as being a possibility. With that in mind, let's take a look at our first ISE FX options pair value, the US versus the Canadian dollar, the CDD. Now, after a strong rally throughout most of January, we've seen the CDD sell off very aggressively back down into this 122, 124 focal zone, which in fact represents a key level of support. And after such an aggressive sell-off, a bounce in here would not be surprising. Any sort of a strong continuation of this trend that we've witnessed throughout the month of January is likely to bring our pair value right back up into this 128 to 130 focal zone. Now, if we do witness some consolidation within this 122, 124 focal zone, any sort of a break below that range is likely to play right back down into that 114, 118 box that we've had on our radar for quite some time now. Well, we found the YUK, the US versus the Japanese yen, looking for support within that 88 to 89 focal zone. And Friday's close off of the high suggests that the momentum still supports a further decline within this pair value. Now, the next logical support level, if this particular area does not hold, should come into play within that 85 to 87 range. Now, the 90 to 91 box still remains an important resistance level should we see a bounce. Now, in the bigger picture, we would be targeting up into that 92-93 focal zone if we see any further strengthening to the upside after a break of that key pivot in at that 91 pair value price level. Next up, the EUI, the US versus the Euro. We were recognizing the 74-75 box as a key level of support and in fact saw a decisive bounce towards that 79-80 focal zone throughout last week. Now, we were looking at that 76-77 area as a key support resistance level, and it is clear now that the pair value appears to be consolidating within the upper range of that box. Now, if this area does not hold, we will likely see a move back down towards that 74-75 area with further declines targeting the 72-73 focal zone. Well, that 71-72 box finally came into play as the BPX, the US versus the British pound, broke out last week. Now, at this point, we are open to the possibility of a rally into that 75-76 focal zone. However, it would not be unnatural to see some backfilling after such a robust move, which would likely bring us back down into that 68-69 focal zone. And finally, the AUX, the US versus the Australian dollar, pushed into the 152-153 focal zone where there seems to be some resistance to further highs. Another leg higher, however, does open the window for a test of that 156-158 range. A break below this key focal zone will bring the 146 to 148 box into play as our first downside target. All right, let's finally take a look at a few of our key points. First of all, the U.S. dollar index is consolidating just above the all-important 84-85 focal zone. There does appear to be some hesitation to move higher. Consequently, a test of the support at 81-82 is a high probability. Our momentum indicators still continue to suggest a bullish sentiment. The CDD retraced back to a natural support level. Further consolidation is expected. Support here will open the window for a test back towards the 130 target. The YUK appears to be starting another leg down. We are targeting the 84-85 range as the next key level of support. The EUI appears to be stalling within the 76-78 zone. We are anticipating a natural retracement as well here after such an ambitious rally. The BPX finally nailed the 71-72 focal zone, and after an attempt higher is currently consolidating just above this range. Although we are open to the possibility of a push higher, a natural retracement is expected. And finally, the AUX appears to be stalling as well. Although momentum supports the possibility of another leg higher, a natural retracement is anticipated. And this has been your ISE FX Options Weekly Outlook for January 26th to the 31st. I have been your host, Jason Ayres, founder and president of OptionsSource.net. Thanks very much for joining me here this week. We'll see you here next.
Thank you for participating in this week's session. Please join us again next week. For more information about Jason Ayres and to sign up for free FX Options trade alerts, just visit www.optionsource.net. To learn more about ISE FX Options, including our weekly webinar series, visit us at www.ise.com/fx. ISE FX Options can easily be traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.